Three, two. All right, all right. How you doing, Melon Heads? It's good to see you guys. We are live. It is Friday afternoon, the best time of the week. I hope you were all well. Hi, Mom. Hi, Dad. I love you guys. See you guys this weekend. Got a got an extended vacay on the horizon, folks. So you might be seeing a little bit of changes on the channel over the next few days because I will be in a not so secret location, but we'll be on the road. So you'll see some different scenery. And we're going to do something a little different today. We are going to do a deep dive into energy because I got a lot of questions. I had my man Miracle Oil was in the chat yesterday asking about energy. I had a couple of other people send questions about energy. And I have a lot of questions about energy because, man, energy just doesn't make sense to me. Well, now it does, now that I've done a deep dive into it. But I spent most of the day digging into energy markets and just figuring out what the heck is going on in the energy markets right now. And I think it's about time that we shrunk my big melon of a head. And you may see this guy in the lower corner. What's happening today, Mish?
Hey, how y'all doing today?
We've got
Go
we got Mish. He is here on location. We are not struggling with the 2 second delay
we are
today.
not.
I don't know if you guys knew when I brought Mish in a couple of times on the live streams over the last few weeks. He was remotely dialed in. We were using web connections and everything like that, and there was a 2 second delay. So we stepped on each other a little bit. It's a little easier when you're here in person, isn't
It
it?
is a little easier because I can wave at you and say, "Hey,
Yeah.
shush."
Ooh, over here, call on me. Yeah,
I
question.
would also like to say hi, Mom and Dad. I will not be going to the layer this week.
Yes, Mish is Mish will not be vacating. I guess that's the word. Yeah,
Yeah.
vacating. That makes it sound like eviction or vacant. Anyway, so real quick, let's do a trip through the indexes before we get too far into the energy because hey, look at this. Great day for stocks today. S&P is up 99 points or 2.63%. Good day for the S&P. The Dow 700 points in the positive today, 2.3%. And of course, the big winner, why not the Nasdaq? Back over 12,000, up 319 points or 2.7%.
And that dead cat really put his rubber suit on today.
Yeah, that cat is really dead.
Yeah.
That's a,
Oof. That was a good bounce, man. I'm not gonna lie.
it was one of my favorite lines from the movie The Rock when
Yeah.
Sean Connery says, "What do you want me to do? Kill him again?" Somebody stop killing that cat, please. He's already dead. But I guess all these problems, I guess this big debt crisis, and all the problems of quantitative tightening might cause and everything. I guess it's all behind us. I guess Brandon's got it figured out.
It's all done.
We can trust him.
Drop a bunch of oil out of the SPR and we're good to go.
Yes, the Strategic Political Reserve.
Yes.
Yeah. Yeah. So good news, everybody. All our economic woes are apparently behind us. Just ask the stock market because it's been straight up for really a week. Look at this 1 month chart of the Nasdaq. Well, in the 1 month chart, it doesn't look so great. We're about halfway back up from the crash that we got from the June CPI, followed by the Fed. So we've recovered about half of that. Now, I actually think, could be wrong here, but I think we probably had a little bit higher, just a little bit higher before we resume our downward move right now.
Yeah.
And I think it all ties in with energy. And that's why we are going to spend a lot of time talking about energy today. And let's take a trip through commodities. Gold is just a little bit higher today, up $2. Silver is up 14 cents. We were down below $21 in silver for a while there today.
I really thought we were going to slip the 20 handle and go into the 19, but it looks like it pulled out a little.
I think we will see the teens. I do think we'll see the teens probably sooner than we would like. And then again, if we ever do trigger those margin calls and we get that big dive that I've been talking about for so long here, I think silver's going significantly lower.
I am curious to see what M2 does at the end of the month when they give us the graph on how much has been destroyed. But you're right. I don't think we've seen the big one yet. I think we saw crypto got a good margin, but I don't think they're done with crypto, and I think there's other people still to go.
I mean, crypto has effectively been functioning as a quantitative tightening mechanism. If you think about it, with everything that's going on, this mass deleveraging that's happening in crypto markets right now, with all of these DeFi platforms going bust and all the loans that were issued going bad. That's deflationary. That is effectively quantitative tightening. So, I mean, crypto is actually serving as a tool of monetary policy right now. I don't think it's one of J Powell's tools.
No, it's
I
not
don't
in
think
his
that's what it
tool
means.
bag per se,
Um,
but yeah.
but definitely what is happening in cryptocurrency markets right now is incredibly deflationary. You know, the crypto market swelled. It absorbed a lot of the liquidity from the fiscal stimulus that the government put out all over the world. And then you had a lot of credit creation in cryptos as DeFi became more prevalent. That was also inflationary, but now as that's contracting, it's basically QT happening in the crypto sphere. All right, we're not going to spend too much time on crypto. I know there's a lot of crypto haters on this channel. I hear you guys, and you want to hear more about energy. So let's get right into energy, shall we? Here we go. Here is the crude oil chart, and this chart is ugly. Can you guys see it? No, you cannot. We got to shrink both our melons just a little bit more. And, you know, it was a couple weeks ago, it was about 2 weeks ago, I did a video about this Goldman Sachs note on crude oil when they said crude was going to average $134 for the remainder of the year. And that was right about here. Pretty much exactly the top.
Yeah.
Yeah, exactly the top. And
Are you covering the top? There you go. Okay.
yeah, you can see the top.
Yeah.
And I am, I went into XLE and ERX right around that time, and those trades are not doing well right now. They are not doing very well. So I've gotten absolutely clobbered on my energy trades. I'm still in those positions. I think energy probably goes a little bit longer. And look, it all comes down to this, folks. Unfortunately, that with all my research and everything I found an incredibly bullish case for energy. But there's one problem, and it's Brandon's poll numbers. And that, if you really want to know what is going on in energy markets, you can summarize it with Brandon's poll numbers, because we are dumping oil from the Strategic Petroleum Reserve at a rate we have never done before. The government, the White House, is dumping our military's emergency fuel supply like crazy to try to suppress oil prices, really to try to suppress gasoline prices. It's not working as well on gasoline as it is on oil because we have this refining bottleneck. We'll talk about that a little bit. But that's what it comes down to. The White House desperately does not want everybody getting together for the 4th of July, which is 2 weeks out, week and a half, 2 weeks out, right? They don't want everybody getting together and just complaining about how much it cost them to fill up the tank before they drove to grandma's house or before they drove to Uncle Ted's
There's
house.
two big federal holidays real close to each other with two different major demographics. And one is behind us, and they got it down to the 360s is where gasoline RBOB, which is what handles your gas price. And then it is going right back up. It went up another 20. It went 20 cents up today.
Wow.
And so we're going to talk about how oil affects the gas price.
Oh yeah. Yep.
So when you send out the 50 billion or 50 million barrels on Friday, they gave them a cut price. I believe at this part that they gave them a cut price, which caused the input price of the oil going into the refinery to go down, which caused the gas prices to go down. But that lever is big on oil and very small on gas. So I think this is about as much as it gets.
And you've probably got a little bit of demand destruction going on also. I mean, people are being squeezed right now, so they're probably driving a little bit less. Still not enough demand destruction, I think. But really what it comes down to is the Strategic Petroleum Reserve. And, I saw this. This is about 7 days ago. This is from Javier Blas over at Bloomberg, which, by the way, you should be following Javier Blas on Twitter if you're not already, because if you want to know commodity space, this guy is good, all right? And he is up-to-date information. But this article here, the gist of it, the U.S. is depleting its Strategic Petroleum Reserve faster than it looks. The composition of the U.S. crude cache will be the next key development for energy markets. And I want to read in a little bit of this here because this right here, this story summarizes why oil prices have taken such a dive over the last 2-3 weeks, why I think they're going to continue to dive until after the 4th of July holiday. I think politically right now, this is all about politics. This is about getting through the big holiday, the 4th of July, without everybody talking about how much this guy in the White House sucks and how much it cost them to drive to where they got to. If they can get prices down a little bit, they get past that one holiday, then I think they take their fingers off the scale and they let prices correct somewhat. I think they're going to keep this up through the midterms, and it's going to be absolutely disastrous in the long run. I mean, this will prove to be such a historic blunder, economic, political, otherwise, because they can't do this forever. All right, there's only so much oil in this reserve, and they are draining it really fast. They've used about half of it already, and if they keep this up through the midterms, which forget about, hey, this is an emergency fuel supply for our military. It's not like we're being marched off to war or anything, right?
Yeah,
And
there's not a huge war going on in Europe right now.
Yeah, and it's not spreading. It's threatening to spread to the Middle East or to Asia also. So yeah, just by all means, let's weaken our country's defensive posture for political reasons. That's great. But let me just read on here. All right.
I digress.
The U.S. has become the world's oil barrel of last resort, single-handedly keeping prices in the energy market from exploding even higher by selling a large chunk of its strategic petroleum reserve. Washington can't use the reserve forever. It's a finite stockpile fighting a potentially unlimited flow shortage, and more worryingly, the U.S. is depleting its cash a lot faster than it looks. And that matters. The International Energy Agency earlier this week warned that global oil supply may struggle to keep pace with demand next year. And the SPR may be the final cushion late this year and in 2023 to put a lid on prices. And I want to just come out a little bit here. Check out this chart. Let me zoom in on this. Make sure you guys can see it. That is our oil piggy bank, as Mr. Bloss put it. We started about a couple of years ago. We had a peak, almost 750 million barrels in this SPR. And look at what has happened over the last couple of months. I mean, we've gone from around 650 million barrels of oil in the SPR to where we are right now at about 359. Almost half of the country's emergency oil supply has been dumped on the open market to suppress prices for political reasons.
All right, now, a big thing of that is it's not all the same oil.
That's right.
It's different classifications, different categories of oil that can be used for different things. And they're dumping our gasoline oil, if you will, out right now. And we're all soon just to have nothing but the oil we use to produce plastic with.
Yep. So what Mish is referring to is we have two main blends, if you will, of oil in the Strategic Petroleum Reserve. There is medium sour crude and there is light sweet crude. And I'm not going to get too much into the differences of it. It has to do with the density and the sulfur content is the difference. The more important thing is our refineries that make gasoline, they like medium sour. All right, that's what we need to keep gas prices lower, is that medium sour crude. The light sweet, not so much. All right, light sweet has other uses. Now, if you look at this graph that I have up here right now, the blue line is the SPR, the Strategic Petroleum, or the Save Political Rear Ends
I like that
stockpile
one better.
of medium sour in blue. And you can see the good stuff. We have sold off about half of the good stuff, starting at about 384, now down to 286. So we're draining the good stuff a whole heck of a lot faster than we're draining the other stuff. We're also draining the other stuff, but pretty soon, if this keeps up for more than another month or so, and we're dumping about 1 million barrels a day right now, almost 1 million barrels a day is just being dumped from the stockpile. By the time the midterms are over, there's going to be almost nothing left. And then we have a whole different set of problems because now he's worried about his reelection, not his midterms. So that's going to be even worse. And what happens right now with 1 million barrels a day of extra oil being dumped on the market? What do you think prices are going to do when that stops? Prices are going to correct, and then they're going to overcorrect, and they're going to whipsaw higher. So what's happening right now with this reserve being drained, with the good stuff being drained faster than the bad stuff, the stuff that our refiners want, when this is exhausted, after the midterms, when they stop doing this, oil prices are going to move north so violently and so rapidly that it's going to take a lot of people off guard. And we're going to read on in some of these other articles. It's not like there's a lot of other stuff that can just come online to take its place. And
I think your boy the other day asked refineries to come online or companies to look at getting more refineries. Those things aren't like magic wands. To take one down and come back up, I think Neil was just talking about 3 months, one in North Carolina. Or sorry, not North Carolina, North California. I just want California to go away and become Carolina, apparently. But
Would you miss it?
yeah, no,
California went away. Would you
no,
miss it?
not really. But you refineries to be built just to get through the EPA takes years, and so that's not going to happen and help us by the end of the year.
And by years, meaning the last time a refinery came online in this country, the
90s,
1970s.
1970s.
The
Yeah.
1970s. Decades since we've built a refinery. And I've got my man Mike Binder in the super chats. Thank you, Mike. Appreciate the support of the channel. He says one has to agree that so far they've done a great job stabilizing the Russian currency.
They have done a really good
yeah.
job of stabilizing that currency.
You know, Mish just loves data. By the way, he's like Johnny Five with the input. You give him numbers and he digs into them. And we were going over some of the videos that have done well on the channel and everything. And some of the more successful videos were ones where I talked about the ruble and what was going on with European energy. And at the time, the ruble was getting clobbered. And I think it's probably time I do another ruble video because since I made that video, and I took a lot of cheap shots at Putin and at the Russians, and when I did it, since that, the ruble has just 180 reversed, and it has gone so much higher than it started at. And I mean, the Russians are still struggling with inflation like the whole world is. But when it comes down to the currency and the currency war and the de-dollarization, Putin has absolutely 100% outmaneuvered the West. I mean, in such a major way, it's unbelievable how much he has outmaneuvered us. Politically, economically, not to say the Russians aren't paying a price for the sanctions and everything else that's going on. But with talk of a BRICS reserve currency possibly coming out now, I mean.
Well, and it's funny that Iran's the one that's running that to try. They're the ones that kind of started that whole, we're going to make a basket of currencies to act as a reserve currency. Right. So it sounds like to me what they're going to do is set up the SIP system to just pay whatever currency you want, and it's going to exchange it. I think that's the way it's going to work because they're talking about having 4 or 5 currencies in that basket of reserve currencies.
And but yeah, thank you very much, Mike. I really appreciate the support of the channel and the super chat, sir. Thank you for that. And I got a kick out of that we have done a very good job in stabilizing the ruble. But what we were mentioning before that, it's not like any new supply is just going to come online. This is another article in Bloomberg, also by Javier Blas. And this is more recently, OPEC Plus mulls when to fire its last oil production bullets. And the cartel is running out of capacity to pump more crude. And I'll skip the majority of the article, but I want to show you this graph here. This is OPEC Plus oil production, right? And you see how it's been ramping up. But this is their production targets have been ramping up, and that's important. You see, every month they've been making a little step change. We had that big drop in oil production after the pandemic, and they've been trying to bring that production back online, raising their target by, I think, 400,000 barrels per day every month for the better part of a year. Well, they're actually not meeting those targets. And they really only have 2 or 3 more of these target raises before they get to maximum capacity, where everything is running full bore. And they're already not meeting these targets that they continuously raise because Libyan production is almost across the board offline. Russian production is struggling to reach the market. They're starting to have issues. A lot of other countries are starting to run into problems. So OPEC can't just increase production. They can't. And, you know, there's this big, Brandon is making a trip to Saudi Arabia next week, I guess, and he's going to, I don't know, what is he going to do? Is he going to lecture them on human rights? Is he going to call them a pariah state and then beg them to bail out his poll numbers by pumping more oil? Is that his plan?
Yes.
Oh,
I
good
think,
plan.
great plan.
Maybe don't bring the bike with you. I just throw him out there.
Yeah, he's going to do something else. You know, he's going around trying to talk people, get production up and this and that. But Saudi Arabia, pretty close to capacity, and they're the last ones with capacity. Everyone else is past capacity.
And the Saudis have been warning that the ESG movement in the West has been cutting off capex in the oil space. I mean, they've been saying because of what the West is doing with the ESG movement that don't expect OPEC to just continuously ramp up production every time you need more because
Hmm.
there's no money to put more wells in the ground. There's no money to replace their equipment to upgrade it. So in 5 years from capex to production. So even if they start investing now, it's going to be a couple of years before they see any new flow.
Right, and there's a lot of places that don't want to invest because are they going to turn around and be capped in 3 years and never get the return on?
Yeah,
And that's out there now, and that's why I think a lot of the frackers haven't come back in yet.
absolutely. All right. So again, it's not like there's a lot of bullish case on the horizon. It's not like we're going to get past the election and they're going to stop dumping the SPR and it's okay because Saudi Arabia is going to offset it. No. I mean, when we stop dumping the Strategic Petroleum Reserve, and we will stop at some point, it's either going to zero or we're going to stop doing it. When that happens, these prices, they're going to whipsaw big time. And, I want to read them a little bit out of this one. This came out, this is 2 days ago. API reports the biggest crude oil inventory rise since February. All right, this was June 22nd. Now, let me bring up the oil chart. What did crude do on June 22nd? Let me look at a 1 month chart. Yeah, we had a big drop in oil price on June 22nd. It corrected a little bit, but oil dropped a couple of bucks on that day. Opened at 109 and closed at 106. All right, but if you read between the lines, look at the headlines at what happened here. The American Petroleum Institute reported a build this week, this is a few days old, of 5.6 million barrels of new crude inventory in the U.S. All right, this is commercial inventory. This is not the SPR. While analysts had predicted a draw of 1.43 million barrels. So we had a buildup of 5.6 million when they were expecting a drawdown of 1.4. All right, so it was a huge surprise, a huge inventory growth. The problem is, check out another paragraph down, the build comes as the Department of Energy released 6.8 million barrels from the Strategic Petroleum Reserves in the week ending June 17th. So that entire inventory build on, what was that, on Wednesday when
Yes.
that came out?
Yep.
That entire inventory build, all of it, plus another 1.2 barrels, it was all dumping from the SPR.
Yeah, 100%.
So that $3 sell-off in oil that we got on Wednesday, that was Brandon dumping oil from the Strategic Petroleum Reserve, making it look like inventory growth. It's fake inventory growth because it's just coming out of the military stockpile and going into the open market. So all of that growth was just phony numbers.
So Mickey had a good point that our boy is living in the 80s. I don't think it's only him. I think a large percentage of our leadership that makes decisions like this are still living in a pre-90s world. And to be honest with you, I kind of think Putin is too a little. I think he's wishing for the good old days. And this kind of feels like, I'm probably going to get some junk for this, and I'm sorry, but this really kind of feels like the boomers' last hurrah, man. They got their war, they got their disaster, they're going to fix
Yeah.
it.
It
And
would have been.
send
What
us.
a shame it would have been if the Boomers had passed the torch before they had a chance to go to war with Russia,
I
or
know.
before they had a chance to go to war with
They
the
got
states.
they got to
if you're on the
finish
other
it up,
side.
man. They started this thing back what? When did Bush tell Gorbachev to take down that wall? Was that 91?
That was Reagan, wasn't it?
Was it Reagan
I
or
think
was
I'm pretty sure tear down this wall was Reagan. Yeah.
Okay, so whoever, hey, somebody in chat tell us who said take down this wall. So yeah, I mean it's been that long, and they never got the chance to go to war with Russia. I do think you have a couple super chats. So.
Oh, look at that! Hey, there's Cheeseburger. Hey, Mr. Cheeseburger, Mr. Matt, thank you very much. He says, looks like the boat's sinking, boys. Time to find the lifeboats. Joe's trying to patch the holes, but he's only making it worse. Cheeseburger, I'm reminded of it was a Three Stooges sketch. I don't know if you guys get the Three Stooges down there. Where are you, in New Zealand, I think, Matt? But the Three Stooges was this old black and white show, these buffoons in the States, and they were in a boat that was sinking, and one of the Stooges starts putting holes in the bottom of the boat with a pike. And I said, what are you doing? And he says, oh, I'm making holes in the bottom of the boat so the water can drain out. That's what Brandon is doing. He's not plugging the holes. He's putting more holes in the hull so the water can drain out of the boat. That's what he's doing. But thank you very much. I appreciate the super chat, Matt. I appreciate the support of the channel as always, and thank you again for the inspiration for the MMMRI video. I had that talk with Mr. Manarino earlier this week. That went over very well. That all came back to Mr. Cheeseburger's super chat all those months ago,
Really
asking
did.
about the
Yeah.
MMRI. So thanks for that, brother. I really appreciate it. I get some of my best ideas from you guys, really. Actually, this came from Miracle Oil's
Yeah.
comment, wanting to know more about energy. So, and we have plenty more energy to talk about right now. And I got Mike Binder is back in the super chats. Thank you, Mike. He says, I heard today from an insider that borrowing for oil wells in the U.S. is as much a no-go for banks today as recreational MJ was a while back. I would say probably even more so.
More so.
Even more so because you've got that political connotations to it. I mean, when you lend for an oil well, you run the risk of having, the nut jobs outside your office picketing and throwing mud at your executives tomorrow. Who knows what they're going to do? Or Greenpeace is going to climb your bank and hang a banner or smear baby seal blood on your windows. Or who knows what
Yeah.
they.
It was Reagan, by the way.
It was Reagan?
Okay.
All right. Score one for the Melonhead. It was Reagan. Anyways, but thank you very much, Mike. I appreciate that. And yes, it is in the U.S. It is basically, and who was it? Kevin O'Leary. I remember he did a video about it because Kevin O'Leary loves dividend stocks. This is Mr. Wonderful from Shark Tank. He loves dividend stocks, and he was saying how much he so desperately, this is like a year or two ago, wanted to invest in Chevron and ExxonMobil because they were yielding like 7 or 8% at the time.
Right. Yeah.
He says their dividends were so beautiful and they were safe, and he said they were undervalued, and he wanted to buy those stocks so bad for his shares ETFs and for his own personal holdings. The problem was he has his ETFs, and he was trying to market his funds to pension funds, to state pension funds, some of the biggest institutional investors. And when he walks into those meetings with those CalPERS officials, right? And remember, these people are using your money
Right.
if you're a state employee. They don't want to hear about returns. They don't want to hear about dividends. They don't want to hear about capital preservation. They want to know your ESG score.
Is it?
And he said if he had invested in those companies, he would have lost millions by just basically making himself unmarketable to any of these pension funds. So he stayed out of them, which, by the way, should have been my cue to pile into ExxonMobil at that time when I heard that, because I don't have any ESG mandates. I don't have to live by that garbage. But that's what's being done, folks. And that is as much responsible for this predicament that we are in right now as Putin, as the pandemic, as the supply chain, as anything. It is ESG. Hashtag ESG kills. I've been pushing that on my channel for a while. I probably just landed myself another 30-day shadow ban. Shucks. All right. So moving on a little bit. I got another. By the way, thank you. That was Mike. Yes, thank you, Mike. I appreciate that for the super chat. The world's most watched oil data won't be released this week. I find that a little
weird.
Little
Little
fishy.
weird.
little fishy. The Energy Information Agency Administration. What's the EIA? I think it's administration.
Association? I don't
Sure.
think it's an agency.
Yeah. They expect to give a status update on a delayed report on Monday. The agency has had a significant data release delay. They haven't had one since 2013. The most closely watched oil data in the world, the U.S. government's weekly petroleum status report, won't be released as planned this week because of system issues stemming from a power problem. Convenient.
Little sus.
Convenient. A little
Yep.
bit sus. Yep. They haven't had an issue since 2013. Hey, you do what you want with that data point. I'm just saying it's a little suspicious that all of a sudden
we
we're
have a
having-
long weekend that they did their best to try and get gas prices down for.
Yeah. We got another one coming.
Got another one
4th of
coming.
July.
All of a sudden, we can't see what the stock was right before the weekend, and then next week, what? We're not going to see it after the weekend.
Remember
Yeah.
all those little Chinese rural banks that are having bank runs? What did they say they were going down for?
That
System upgrades.
System
right?
upgrades.
Yeah. In April, we apologize for the inconvenience. Now we're heading into July, and they still haven't reopened. So a little bit suspicious. You do what you want with that one. I'm not making any suggestions whatsoever here.
It's not so much John DiNardo. He's asking, how do you forecast power problems? It's not so much that we forecasted power problems. It's just way suspect that this report is so important. Then all of a sudden this morning they couldn't put it out because they had a technical problem.
system.
Basically, what they did, we think, is they lost power to their main server, and they had no backup, which is just also sus.
It's only the
It's only the
EIA.
major report.
I
You
doubt that.
think you'd have a backup somewhere, but
Like they said, the most closely watched energy data point, billions of dollars flows back and forth by the hour based on that information. No backup. No, just one system goes down.
yeah,
Okay. Maybe we get a backup for that system. I just throw them out there. All right. So we talked a
Harp.
lot about oil and how oil, it really came down to the dumping of the SPR is what's driving oil markets. All right. Now let's talk a little bit about natural gas, because natural gas, there's some serious problems brewing in the natural gas world. And Mish, you and I, we didn't actually have a lot of time to talk about this before we started this stream. So this is gonna catch you off guard with a little bit of this stuff. Germany warns of Lehman-like contagion from Russian gas cuts. That's interesting. They should mention Lehman-like, because Lehman was a liquidity problem, right? Lehman got caught and they couldn't. Nobody wanted what they were holding as collateral, and they couldn't get the short-term funding they needed, and they crashed. All right, and they're saying that they could have a Lehman-like crash from Russian gas cuts. So they're saying they could have a liquidity crisis in European banks because of what's going on with natural gas.
Which is crazy. Natural gas, of all things, to cause a liquidity issue.
Well, Germany has spent the last 2 decades absolutely destroying its domestic energy infrastructure. They shut down their nukes. They built all these beautiful, politically savvy windmills. And, Greta was so proud of everything that they did with their windmills. Problem was, the whole time they were building those windmills and patting themselves on the back for being so ESG, lovey-dovey, unicorns and rainbows and all that good stuff, all they were really doing was making themselves 100% dependent on Russian natural gas. Isn't that funny how that works?
Yeah.
Oh, I love it. These guys are great. Again, good job, you ESG folks. You really, you just
Doing a good job.
Yeah, global starvation, war, everything. But
We
you
got
know
to
what?
come up with a good acronym for ESG. Starvation group. Extreme starvation group.
Yeah.
Yeah.
I'll work on that one.
Yeah, we need to work on that one.
Yeah.
ESG.
I've got above my pay grade. Thank you very much, sir, for the super chat. He says no one listens to safety brief until the plane is crashing. Pretty good analogy. Above my pay grade. Appreciate the super chat, sir, and keep up the good work over at your channel. Appreciate that very much. And nobody. Let's just say, when the oxygen mask drops from overhead, maybe that's not the best time to pull out the safety card and see where the emergency exits are. I'm that weirdo on the plane. As soon as I sit down, I do that, and I count the seat backs between my chair and the emergency exit, and I also do it behind me, because there's usually an exit behind you also.
There is. Which one's closer?
Yep. And I count the number of seat backs, because if there's ever a plane crash or something like that, chances are the lights are out or the cabin could be full of smoke or whatever, so you have to feel your way out in the dark. That's just I work in nuclear power, folks. I'm always imagining worst case scenarios. We're trained to do this, and this is just the kind of twisted stuff that goes through my head on a daily basis. I'm a real gas at parties. Really, I am so much fun at parties. Not at all. But thank you very much, above my pay grade. I appreciate that. All right, back to the Lehman Brothers situation that's going on here.
Just before we get there, there's a couple questions in there. There is a super chat, but before we get to that, there's a couple people saying that the previous president made some claims about this, and yes, he did talk about oil prior to leaving office, and that it would go up, and he was correct on a lot of things, and I will give him that he did a lot of things correct on those things.
Yep.
So we don't need to go back over it. Yeah, he warned them. They laughed, and here we are.
Yep. Remember when they used to make fun of drill baby drill and say how, you'll never produce enough oil?
Yeah.
And within 5-6 years, the U.S. was the biggest energy producing country in the world.
We were net positive for a couple years until we got shut back down.
Yep. And now we're the only hope Europe has. The U.S. and Qatar. That's it. If the U.S. and Qatar are not able to supply enough liquefied natural gas to Europe this winter, they will freeze, or they will ration, or whatever. And we'll get to that. Trust me. Man, I'm just getting warmed up here. Miracle Oil, thank you very much. Miracle Oil, by the way, inspiration for this whole segment. Thank you, Mo. So you have her, not her, it's a he. You have Miracle Oil to blame for this whole mess. He says, hey, guys, does that mean that there's more short-term downside for XLE and USO? Should we hedge with some puts? Please do charts for both. Thoughts on market next week. Uh, so I think probably at least through the 4th of July. I think through the 4th of July, we're going to see this downward pressure on oil because, again, if it's poll numbers that's causing the problem in oil markets, that's driving the prices lower, then they're not going to let those prices rise before everybody gets on the road for one of the busiest travel days of the year. So I think they will keep these prices suppressed as much as possible until the 4th of July. They might let off a little bit on the 4th of July. Emphasis a little bit because they still have midterms a few weeks after that. So I think probably another week or two tops of these prices down here. And, it's hard to say because they are going to keep dumping from the SPR. They're going to keep doing it. It's just they probably slow it down a little bit after the 4th of July is behind them. So I think in the short term, yes, probably more downside for XLE and USO. As far as hedging with some puts, honestly, I'm going to stop short of making a call there. I am still long XLE, although it's performing very poorly. So take that with a grain of salt. And keep in mind also XLE, that is energy stocks. XLE's holdings, it's ExxonMobil, it's Chevron, right? It's the companies. USO, that is oil futures. So I'd say USO may probably react to the upside sooner than XLE would because XLE could be dragged down with the indexes. If we get another big move down in the indexes, that's probably going to drag down XLE as the whole stock market is selling off. USO may not go down. You could see USO going up at the same time. So take that with, again, not a financial advisor, not financial advice, all that CYMA stuff. But suffice it to say, short term, XLE probably heading lower through the 4th of July. And then I'd probably revisit the charts after the 4th of July.
I would like to say at this point, though, that as a general, please, people stay away from margin.
Oh,
It's
always.
stay out of the equity and debt markets right now. It's not going to get pretty.
And there's the cheeseburger again. Thank you, cheeseburger. He says I do that too. Did you know you can watch episodes of Air Crash Investigation while you're on the plane? Wow, how to cause a panic in the seat next to you, huh? See, I'm twisted. I'm not that twisted. I don't seek to spread my panic to the other passengers on the plane. I just sit there and imagine just most terrifying scenarios very privately in my own little twisted mind. That's messed up. Watching Air Crash Investigation while on an airplane.
It is. It's funny though.
It's hilarious. Yeah, it's twisted, but it's hilarious. But thank you very much, Matt. I appreciate the super chat, sir. All right, back on what we've got here. Germany warned that Russia's move to slash Europe's natural gas supplies risked sparking a collapse in energy markets, drawing a parallel to the role of Lehman Brothers in triggering the financial crisis. If you recall, I did a video about a month or two ago about how all of these commodity clearinghouses and trading firms were asking the European Central Bank and the Bank of England for emergency liquidity assistance.
2 months ago.
It was 2 months ago. Man, time is flying by.
It is.
Because they were worried about liquidity problems caused by this big spike in commodity prices. Now, commodity prices have come in substantially since then, so it's kind of faded from the headlines. But it's coming back in a big way here, talking about Lehman-like contagion from Russian gas cuts. While energy suppliers piling up losses are by being forced to cover volumes at higher prices, there's a danger of a spillover effect for local utilities and their customers, including consumers and businesses, said Economy Minister Robert Habeck. He said Thursday after raising the country's gas risk level to the second highest alarm phase. Now, here's the deal with that alarm phase. There's 3 of these gas emergency plans: the early warning, the alarm, and the emergency phase. Now, the reason this is important, that they've raised it to a stage 2 alarm, is because at stage 3, they can institute rationing nationwide. All right, so they're now at stage 2. If they raise it up, they're getting into rationing. Now, let me just do, because this is a long article, and I want to get to the right part. Here we go. Germany's network regulator, known as BNetza, those guys, would implement rationing if the government triggers the emergency level. The Bonn-based agency has said leisure venues would likely see supply cuts, while consumers and critical public services such as hospitals would be protected. And if you believe that, I got a bridge I want to sell you, because there is no way that it will just be leisure venues that get cut off.
Oh, yeah.
Yep. But I guarantee you, Klaus Schwab will have plenty of gas flowing to his luxury villas and his office buildings and everything else. What it's going to be is the people who are connected will get the gas, and the people who are not will not get gas. And if heating your home in Germany is inconvenient for those guys, guess what? You're not going to get any. All right. So they'll always tell you that consumers and public services, blah, 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 will be protected. No. They'll protect their own butts first, and then if there's any left for you, then they'll give you some. It's very nice of them, really.
Yeah.
Gas is a crucial part of Germany's energy mix and more difficult to replace than Russian coal and oil, which are being phased out by the end of the year. Now, I also want to mention something about their capacity, their storage. Where is it? Here we go. Russia's move to tighten the grip on supplies come as Europe is trying to fill up their gas reserves before the next heating season. That's important. Right now, they need to be refilling these tanks. All right? They need to be gobbling up as much gas as they can to get these tanks filled before it gets cold and everybody turns their heat on again, which usually starts around October, but the bloc's gas storage was only 55% full on June 22nd, compared with the 5-year seasonal norm of 57% for this time of year. And the goal is to reach 80 by November 1st to avoid problems during winter. And keep in mind, Nord Stream 2 was this big gas pipeline from Russia to Germany, and that's dead now. They killed Nord Stream 2, but Nord Stream 1 was just shut off about 2 weeks ago, a week and a half ago.
It was down for 10 days. I don't think it's up back yet.
It's
they were
not back
talking
up
about it yet.
Now, they're saying it's a maintenance issue, but it's a very conveniently timed maintenance issue, much like those systems over in the Chinese village banks and much like the Energy Information Administration and their systems. You know, hey, very well-timed maintenance problems.
Yeah, really well-timed.
Well-timed if you're Vladimir Putin. And if Nord Stream 1 goes down, they will not be able to fill those tanks before winter. And keep in mind, the United States LNG capacity just took a hit with that Freeport plant that caught fire and blew up a few weeks ago. And that's a segue into here. Here is the ICE Dutch TTF natural gas futures. All right. Now, this is going back to March. Here's that huge spike we saw in March when the invasion started. And the prices came back down. But you'll notice that they've made a step change higher, and they have stayed higher over the last couple of days here. And we continue to trend upward right now, currently at about 129. And I believe this is euros per megawatt equivalent. I'm not sure of the units here. I know this is different units than American gas futures. But as you can see, you know, the last week and a half or so, we made a significant step change higher, and we've stayed there. It hasn't been one of these big spikes that came right back down, and we continue to trend up. And that also coincides with that Freeport plant blowing up here in the States, which has seen U.S. natural gas prices start to march steadily lower. Because there has been, this might be a little counterintuitive, but with a U.S. LNG plant going down, there's less draw from the Henry Hub, which is the U.S. standard. There's less draw to make this LNG to send it to Europe, so gas inventories, natural gas inventories in the States are starting to build up with that plant being offline. It's driving the European prices higher. It's driving the prices here in the States lower. And somebody was asking before we started this stream, I forget who it was, but they were asking about LNG and if I'm back in LNG yet. LNG being Cheniere Energy. The answer is no, I'm not in Cheniere Energy yet. I got out of that one a couple of weeks ago. I have been meaning to get back in, but I'm still not back in. Now, there's a couple of things I'm watching here, but I can tell you the environment is getting better with this Freeport plant being offline. It's bringing American prices down and European prices back up. So that's adding to the profit margins of Cheniere Energy. Now, technically speaking here, this is the 9-day moving average I'm looking at right now. And here's this double top pattern that we had a couple of weeks ago that kind of scares me. And I'm looking at these levels down here. This is a very rough technical analysis here. It looks like the previous resistance around 117, 118, just below the 120 level, that may be acting as support pretty soon. And that's also right around the 200-day moving average. So with this big downtrend that we've been in since this double top pattern, I want to see us come down and challenge this 200-day moving average and get a good bounce off of it. And I'd also like to see a close above this 9-day moving average for a day or two before I get back into this one. So I'm targeting around 120 low 120s to get back into this one. Really only a little bit lower than we're at right now. And also keep in mind, watch that Freeport plant. Right now, it looks like the Freeport plant is going to be offline for a little bit longer than they were initially saying. It was only supposed to be down for like 3 weeks. I think we're probably thinking more like months now. That means U.S. prices could keep trending a little bit lower. European prices keep going higher, especially now that Nord Stream 1 is offline. So that is natural gas.
Yeah.
Again, all that CYMIA, full disclosure, I'm not a financial advisor, not financial advice. Do your own research and your own DD. And again, I have no position in Cheniere Energy at the moment, but I am looking at getting into that one. Now, on to gasoline. We haven't talked about gasoline yet.
We haven't got to gasoline yet?
No, we talked about oil, but we haven't talked about gasoline.
Well, do you want to check closing markets real quick?
Is it? Oh, my goodness, it's 4 o'clock. Let's see what the market's closed at. Hey, look at that run up into close. S&P closed up 117 or 3.09%. A lot of buying right there at the closing bell. That's interesting. What did the Dow do? Dow closed up 812 or 2.65%. Oh, my God. I can't look at the NASDAQ. Don't tell me.
Yep.
Oh, my goodness. 400 points higher on the NASDAQ, almost 3.5% on the day. And what a week the NASDAQ had. Look at that. Starting the week down around 11,449, closing at 12,105.
It's actually up for the week.
It's majorly up for the week. Again, maybe we have another week of this. I think this is running off energy right now. And
I think this is 100% energy.
You know, the other thing I want to talk about is the debt market. We haven't talked about that. Yields were up a little bit today. Let me refresh this window and make sure we're accurate here. Yeah, yields were up 5 basis points. But we took a big dip in the 10-year Treasury yield.
Yeah, we did.
Since June 15th. And I had Manarino on the channel this week, and he is convinced that the Fed is secretly doing quantitative easing right now while they're telling us they're tightening. I'll be honest with you. I don't want to believe it. I'm not saying I don't believe it. I'm saying I don't want to believe it, because that is sick and twisted. If they're really all these publicly facing events talking about how they're tightening and how they're fighting inflation, and all week they're in front of Congress saying how they're so steadfastly committed to fighting inflation. If they are secretly behind our backs doing QE and buying up the debt market with printed money right now, that's massively inflationary.
It is, and we need to know that as a group of people, because they're doing things to our purchasing power we would like to know about. And especially if they're doing it that secret crap again, where they're giving secret loans to banks and not telling us.
The plunge protection team and
the 30 trillion they blew out in 2020 secretly given out to banks. Yeah.
Well, that was 30 trillion in cumulative repos that they gave out, right? So that 30 trillion number is a little bit misleading, because those are one-day loans for a few billion at a time, right. And then it's paid back the next day, and then they give another couple of $1 billion loan, it's paid back the next day, another couple of $1 billion loan. So if you add all those up, it was 30 trillion. They didn't print $30 trillion and make the loan.
They still printed over trillions.
It was. Here, I have the Fed's balance sheet up. I mean, we can see what they did. And again, that's what they did. That's what they did publicly facing. Let's go
I was going to say the public. I'm not worried about the public facing. I'm worried about behind doors, because China has pretty much proven with their backdoor debt market that once you start,
there's no stopping it.
No stopping it.
And that's the debt-based system, folks. It is every bit a narcotic. Financially speaking, it's a narcotic. Once you start on a debt-based system like this, you need increasingly higher levels of debt in order to stay solvent. It's the only way this system keeps working, especially if you're going to act like you can fix everything and make recessions obsolete. Here's a hint. You can't. They just make the problem bigger and bigger by turning on the spigot every time things get a little tough. You need to allow these natural contractions in market. You need to let malinvestment die off. You need to let the brush fires clean the forest floor so that new growth can come back in. And they haven't done that for really 40 years. And now we're all going to pay for it. And I guess their answer again is going to be easy money. Turn the easy money back on.
Brr.
And check this out in the 10-year. I mean, look, June 15th was supposedly when quantitative tightening, when the first stuff was going to roll off the balance sheet, right? They said they started QT on June 1st. June 15th is when the first short-term treasuries were going to roll off the balance sheet. And then June 15th was also when they announced their 75 basis point rate hike. Well, look, as it happened, the yield on the 10-year treasury peaked on June 14th. Well, if all those treasuries rolled off the balance sheet and they did the 75 basis point rate hike, then we should have seen a step change in the opposite direction on the 10-year yield. And then all of a sudden, where did all this money come from? Where did all these billions of dollars that flowed into the debt market come from? If somebody says crypto, I'm going to jump out of my skin. I'm going to freak out because no, Shiba Inu bros did not sell their Shiba Inu, their dog coins, and buy U.S. treasuries. All right. I know some of these guys, they don't do bonds. All right. So that's not what's going on here. I don't know where this money is coming from. And the list of people with the amount of money it takes to lower the U.S. 10-year treasury yield, almost 40 basis points in a couple of days, that is a very short list.
Yeah,
And
one of them has C in front of it. Another one, you're talking big money people. And I think a lot of that actually has to do with what's going on in Japan, to be honest with you. I think people are doing some weird kind of money, kind of bond conversion there because they know they have a set price.
Well, what's going on in Japan? Geez, that could really, that's a whole topic for a whole other video. But what they're doing in Japan could really cause trouble here in the States. And there's really nothing we can do about it. It's up to the Bank of Japan, and they're in cuckoo land with what they're doing over in Japan. So that's probably a subject for a whole other video. We're not going to get into that right now.
You want to say hi to Sage?
Oh, Sage here?
He is.
Sage, we've got a couple of minutes. Hey, Sage. By the way, I'm going to be going on Sage's channel a couple of minutes after we're done here. Sage
awesome.
didn't get me a link in time. I was supposed to do a redirect while the stream was going on, so we're going to have to put a link. Mish, maybe you can find a link to Sage's live stream on his channel and throw it up in the chats.
I will.
As soon as we wrap up here in a couple of minutes, we're going to head right over to Sage's channel. Eric, send me an email, brother, when you have a second.
Actually, Sage, just text it to me. I've got it. Just text it to me.
But we'll be over at Sage News Live. We'll be talking also about energy over on Sage's channel. So if you guys want to make the trip over there, at about 4:15, we'll be going live at Sage's channel. We got a few more minutes here. All right, let's keep going. Gasoline. Again, gasoline, this is politics. This is all political, folks. This is all about preserving Brandon's poll numbers, and this is the dumping of the SPR. Now, it's not had as big of an effect on gasoline as it's had on oil because you've got this bottleneck in refinery capacity in the United States, and that means oil prices going down doesn't really do that much to alleviate the supply-demand imbalance in the gasoline market. So even though they're doing all of this dumping of oil, I mean, you probably haven't seen, what if prices come down a couple of cents at the pump? I mean, we're still paying almost $5 a gallon here in Pennsylvania. We have some of the worst gas taxes in the country in Pennsylvania. But looking here, this is U.S. gasoline inventory levels. And if you see right now where we are, we're in June. We are at 217 million barrels of gasoline in inventory in the United States. And if you go back over the last couple of years in June, you can see, let's see, last year around this time frame, we were at 241, significantly higher than the 217 we're at now. Go back a year before that, in June, we were at 255. Go back before that, we were at 230 in 2019. Go back before that, we were at 240 in 2018. So right now, at this point in the year, our gasoline inventory stocks are significantly lower than they've been at this point in any other year. And we're just entering the season where these inventories are going to start being drawn down. So we're going to get pretty low this summer. So again, they're going to do everything they can to keep the gas prices low through the 4th of July holiday, so you don't get to your barbecue at Uncle Ted's house and start complaining about gas prices. They don't want that conversation to happen. They're very cognizant about what gets talked about at family gatherings on the holidays. So they want to keep the prices down at least for another week. After that, I think they let off a little bit. I think they have to. They're dumping so fast that the SPR is going to be empty before they get to where we're going. And I'm telling you, the whipsaw correction in energy prices when they stop dumping from the Strategic Petroleum Reserve is going to be so colossally bad. You see, right now, here's what President Jack would do, right? By the way, don't say Jack run for president because the stuff I did in college. No.
Yeah, you're like me. I can never run for office.
But yeah, we won't be running for office here. But look, if President Jack was in charge, you know what I would do? No, I would not be dumping my strategic petroleum reserve right as the presidents around the world are beating oil drums. No, I would be letting people drill for oil and produce more oil. I might even be considering incentivizing more energy production instead of penalizing it. I would definitely not be dumping my strategic petroleum reserve. I definitely wouldn't be vilifying my energy companies in public every day. I would be making them guarantees that if they made investment in new production, that I won't take it away from them through my tax code or through my ESG henchmen within 2 or 3 years. That's what I would be doing.
Yeah.
And I'd allow some new refineries to be built. Imagine a new refinery. What a thought, right? I mean, God forbid we put people to work building refineries and then operating refineries.
Yeah.
Especially the rest of the world needs refined gasoline. We could be an exporter of gasoline. We build so many refineries. We have all these ports and all this existing infrastructure. But what do I know?
Yeah.
Just throw them out there, folks.
I put Sage's link in the chat there.
All right. Outstanding. And we are about 5 minutes away. We'll be over at Sage News Live in about 5 minutes.
Okay.
Now, look, folks, I didn't get quite into everything I wanted to on the energy markets, but I also have to touch on this one because this is also tied to energy. This is the fertilizer situation because besides my energy trades that are doing awful right now, my grain trades are also not doing very well. All right. And this is DTN Progressive Farmer. This is the fertilizer price chart. And we have now got a couple of weeks in a row consistently lower fertilizer prices. And I want to make sure you guys are aware of this. And this is directly attributable. Number one, the farmers have bought what they're going to use this year. All right. So we're back into the point where the fertilizer starts to accumulate and inventories start to rise again. But the other thing is energy prices have come down. So that has somewhat put a lid on fertilizer prices also. I don't think it's going to last. Long term, I think this is still a great trade because, again, when they take their foot off or they take their fingers off the scale and they stop dumping from the strategic petroleum reserve, oil prices are going to rocket higher. And I think natural gas is going to keep getting more expensive in Europe. That situation's only going to get worse. So the fertilizer plants in Europe, they won't be coming back online this fall. So the fertilizer problem is a multi-year problem. I think it's still here. But in the short term, this trade is not doing so well. And I just want to read you out of here. Retail fertilizer prices continued to move just slightly lower the second full week of June, according to retailers surveyed by DTN. This is the third week in a row that most prices were less expensive. 7 of the 8 major fertilizer prices were lowered compared to last month. None were down by a considerable amount, meaning 5% or more. All right, so here's the red line. This is your 2022 fertilizer prices. All right, we started covering fertilizer back in the fall on this green line here, and we rode them up all through the fall and all through the winter. They made a big step change higher when the invasion started, and we've started to creep down. All right, I'm going to stay on top of this story. Now, my corn and my wheat trades, I have got call options in corn that go out to August and go out to January. I'm probably going to have to close my August position at a loss, and I'll probably roll that into the January ones because I think after the election and after the holidays, when the energy prices start to skyrocket again, I think we're going to see this green chart all over again this fall, only a much higher level. So I'm going to stay in those January calls. I'll probably add to that. But right now, my August position in corn, I don't see anything in the next couple of weeks that's going to cause a major turnaround in that. So I'm probably going to close that one out. Not my best call of the year. And same thing with wheat. I mean, wheat
Don't
prices,
even get me started on wheat.
Yeah, wheat prices have just absolutely collapsed. But
just cratered.
It's short term because I don't think globally the supply-demand imbalance is still there.
Yeah, without going through the numbers, because no one likes to see numbers without charts. We don't have the charts ready to go, but we are below yearly usage for the amount that we're producing. And that is never a good place to be when you're talking about food.
Yeah.
So it should not be going down.
All
Now,
right.
there is one more super chat I saw just come in.
Oh, I saw a cheeseburger. He says, can you talk about DVN on Sage? DVN is really the same thing as XLE and the same thing as the oil trade cheese. And thank you very much for the super chat. I'm still in DVN also. It's another one. It's not doing well right now, but I think that one is going to turn after the 4th of July holiday. Short term, probably still more downside on DVN. Again, not a financial advisor, not financial advice. And now it's 4:14. We got to roll over to Sage's channel. So, Mish, why don't you pop that link in the chat one more time so everybody has it, And I'm going to be over on Sage News Live starting in just a couple of seconds. No rest for the wicked, folks. Guys, I want you to have an awesome weekend. Tough times ahead, but they're not here yet, so enjoy them. Thank you guys for the super chats. Thank you to my Patreon supporters. I appreciate it, guys. Reminder, we have those weekly Patreon-only Zoom meetings on Wednesdays. Had a great time talking about pretty much the end of the world with the Patreon supporters this week. That was a good time. Link in the description down below, should you feel so inclined.
Hey, real quick, remember spay new to your pets.
Oh, yes. Thank you, Bob. All right, everybody. Till next time, live small and dream big.
Cheers.
All right, all right.
All right, we're out.